Welcome to the Trading Blueprint. In the Trading Blueprint, we start by looking at the daily chart to learn how we can use that to our advantage. On the daily chart, we look for full reversals and first wave of a new trend, as they tend to work best for our system. Let us take a look how to qualify a daily chart. This is a daily chart of Euro US dollar. You see it up here, 1 day, and the feed is OANDA or ONA. Every Japanese candlestick here shows 24 hours of price action or 1 day price action. So what we start by doing on each chart, we can do that on the weekend, we can do that when we see there has been a change in any trend or any support resistance be taken out and so on. Basically what you do, you take a line from the very top, go down to where the first body starts there, right? Okay. And as soon as you find your peak, the highest set of candles, this one, first one here, this one, you move down to the left side where you can see a clean support like this, right? Where you have 2 candlesticks to the left and 2 to the right that are equal. This is the line equal than this center candle's open price or higher. So there's 1, 2 to the left, 1, 2 to the right, and this center candle. This is a support. Sorry, too many lines there. We take this one. So there's our top. We go down to pretty much there, right? Now, when this chart is done, assuming now it hasn't U-turned, we are up here, and let's say we are here. It has not U-turned yet. What you can do then is just click on the line and add alert on horizontal line. Looks like this. And then you are notified the next time the daily chart will hit this line, this support line. What we are interested into is to see that this peak's first major support is taken out by price. It can wick or preferred that a body actually closes at it or below it. Right? You will understand that better when we go through waves in just a couple of minutes here. So what you want to see, you actually want to see a triangle like this. Price has been taken out from going up, now potentially creating a downtrend. That's how you qualify a daily chart. The market moving waves. We can call them waves for anything with 4 letters or numbers, like A, B, C, D or 1, 2, 3, 4. It doesn't really matter. I, however, use A, B, C, D as names. Back at the same chart, we have understand that this wave or this move up to the top has now been taken out. So potentially, if we put a line in the middle here, this is our buy market, this is our sell market, right? And in this buy market, there are a lot of waves, these 4 letters and numbers. Let us do like this to make it as clean as possible. We take away this support because we're going to learn this visually. We don't need to make lines, of course. We're also going to remove the top there. We're also going to remove this one. There, like this. Then we put this one back because we want to know where is my buy side, where is my sell side, right? Okay, so then what we do, we go to, it's the 6th tool on your trading view. You see I have a lot of different wave tools here. What we are going to use, we're going to use one called ABCD pattern, this one, right? What we do know, I'm not going to start from the very beginning, I'll start from the latest wave here. This is the support here, so this is called A, and this is called B, this is top. A to B, 0 to 1, or 1 to 2, 100 meter, doesn't really matter, right? And then market retraces to C, and then we expect it to move to a place above the B to come to what we call extension D. Okay? So a top to a bottom, or a bottom to a top, is called AB, the AB range that you just saw. We can also call it 0 to 100%. It's all mathematical, and we must understand that we move 100% or 100 meter between top and bottoms. What you also saw on the chart was at some point the market will retrace. A retrace is a move opposite the current trend direction AB. So if we go from A to B like we did in our chart, market doesn't have the power to continue just right up. It has to retrace. It's like if you were running 100 meter and now need time to get your breath back. We call that retrace or C wave. When our C wave or our recovery to getting our breath back goes too far away, the C, we may return back to our start named A, the bottom of our wave when we were in uptrend. That is a full reversal, and that is what we are looking for to trade the first wave of a potential new trend. So to summarize it, market moves in waves of A to B as trend, 0 to 100%. Retrace between A and B as C. C must always be between A and B. Can't be above, can't be below. And when that is done, we expect the market to finally push us above or below the B, the 100 meter, to an extension named D. That's our target. And the process repeats. So let us go back to our wave here. We started at the support or bottom, A to B. That was our 100 meter, right? We are running here. Now we are exhausted. It needs to take back our breath or drink some water, right? So we have to rest for a while, and while we're resting here, the market moves back, right? Because our water bottle is in about half of the range between A and B, which is normally a good place to find new trades for an uptrend, right? So we place our C there where we get the water, right? And now when we have our breath back and we have our water, we are now ready to break the B here to reach a D position, like this. And then this wave, this up wave, would be complete. The problem with this wave was that the D never happened because the B were never broken. What market did instead was the C was going on for a long time here until it finally broke down to the beginning of this up wave, A. Right? When C retraces back to A, it's no longer a retrace. It's a full reversal. And when the full reversal happens, there is no more up wave. Right? If the D can't be reached, it's not an up wave. Instead, we must U-turn our wave. So when we were in an up wave from A to B to C to D, we do the opposite now. We started our peak high, that is our A. We go down to where we have our support broken, right? The first one was here, right? See that? That's our B. And then we expect the market to go up to around 50. See there, the numbers are 50 there. It's where it many times halt, halfway of this one. You're running 100 meters, you need some water here. So you need to go back to get your bottle here. And then what we expect here is a setup to move down, passing the B, coming down to the D, which is here. And then this wave is the first down wave since the last up wave was broken, right? And when this wave is complete, the market just continues and it repeats, right? If this was A, B, C, D, the B and D is always on the downside in a down wave. The A and C is always on the upside. So the old C, or the previous C, now becomes a new A, and the old D becomes a new B, and this one becomes a new C. And now we want to break the B here, the new B, then we will get a lower low to a new D. That's wave number 2. And this is how the market repeats. The numbers is not always perfect, but when you can visually see this with your eyes, you don't need to set up all these waves, but it's good to understand, right? Because what many people do when they are trading waves, they talk about trend lines, and the trend lines always connect the A and C points. There may be, let's say this one was going up here, right? And this C here, this was an A, B, C here, would be lower than this one, then you would never draw your trend line down here because it's incorrect. You will always use the highest AC to draw a trend line, right? So if we remove everything here now, if you can visually see, here's the peak, here's the support taken out, here's our A, B, C, D, right? And if we were using, which I don't do, if we were using a trend line, we would let it land on this AC that we have here, right? Right? That's our latest trend line, right? Okay. And you can never ever draw through price with a trend line unless you make a new lower low for that, right? We don't use trend lines, but it's important to understand that the AC has a purpose. They create trend lines. Like the same way with the BD, channels trend lines, right? The waves can be measured in percent, but it can also be measured based on average daily range, or ADR for short. We can have full reversals, or continuation waves. And we can use the ADR, we can use PIPs, we can use percentage. We're using the Fibonacci tool that we have not come into yet, but I'm going to show you how it's done. So again, back to our chart, we have reversed this peak by taking out the support. We actually did it here already because there are 2 to the left, but it's too small way really to trade because you see what previous block you have. So this is the first one, this is the second support. Okay, so by knowing that this one has been taken out, and you know this is your A, B, C, you can now use, if you want to, a Fibonacci tool, taking the peak top to the B low and look for, there's 50%, look for 50% level. You can put a line there, right? That's your A, B to C, right? A, B, C, there are three letters, right? That's using Fibonacci, or use your eyes. That works as well. If you want to start to use percentage-wise extensions, that means when price moves below B, you take the same Fibonacci tool, but now you start at the B point. Remember, this is A, this is B in a down wave. The B point up to the highest C. When you are between A and B, you don't know where the highest is because it can go up, down, up, down, up, down, right? But now, since we have broken down, we are looking for different levels where we may potentially exit the trade. As you see, this 1.6 to 1.8, which is the most common one, has a good wick area here. So it would be a good exit point, or at least start to trail your stop loss. Then it's 2.6 to 1.8 and so on. That's how you can use Fibonacci. Now, we have a nice tool that was just created that is called ADR reversals. Like this. I have done like this. I've taken away these two because it looks like this when you add it first time. I taken away the background color. I took away the dots here, as clean as possible. Just the lines, and then I left this as it is. This one using something called ADR 5, meaning it's taking the last 5 days average price and divide it by 5. And then you get a median of price. So if it was 180, 93, 94, 117, it maybe be something like 93.5 pips on average, right? And what it do, you see that this whole line here, it says, okay, it has moved 3 ADR, right? 3 ADR down, and this dashed one here says it's moved 1 ADR up. And you can set this in the settings. So you set 3-1 here, right? This is very handy, simply because measuring ADR is very powerful, but it's very time consuming unless you have an automated solution. Now we have that. So by knowing, let's say we have this, right? By knowing that the market has moved down 3 ADR, that the market has moved up 1 ADR, which is super great, because that's normally what they do. They move it up 1 ADR. That's normally also the right Fibonacci level, right? And you see how this area here works pretty well with 50. So you want to make sure that you have moved above 1 ADR when using ADR. You don't have to use ADR. You don't have to use Fibonacci. You can use other tools, of course, pivot points or whatever. But when we use the ADR plus the Fibonacci in the first wave, we get an almost exact tool to see where do these confluences happen. Where do the ADR end? Where is my nearest Fibonacci number? Can I find something from this information that can help me in trading? You can bet you will. Right? Here you can see it mode 3 ADR, and then it will just extend because it's of course 3 ADR. If this one was 3 ADR, this one will be, and this one as well, right? And then 1 ADR down, 1 ADR down, right? So many times the 1 ADR in the opposite direction. This is A, B, C. This is a larger wave, right? Here you have A, B, C, D, but that A, B, C, D becomes the wave between A and B in a new larger wave, and this is a C for moving down, right? So this tool is super powerful when you practice it a little bit. And here you can see your new down wave to here. It doesn't look like much for the world, right? More this one here is more likely. I would say this one is more likely because that's where the next block is, right? Such things you need to practice, of course, and get experience with. But when you can apply the reversal first wave with this ADR, with Fibonacci, understanding how the waves repeats and how the wave works, your knowledge or your level of knowledge will be raised, and you will know more about wave trading than 99.9% of all other retail traders online, for sure. Now, since we have found a chart where we have a wave A, B, C, either first wave or continuation, second wave, third wave. After third wave, you should be really careful because many markets just move 3 blocks down, 3 waves down, right? 3 lower lows, 3 higher highs. But as we have the tools, as we have the ADR can be used for continuation trading, right? When we do the first wave, we can just use our eyes, do 50% or more as the retrace, as the C wave, A, B, from top to bottom, back halfway. That's where we want to look for an entry. And the entry is found on the hourly chart, right? You can use 4-hour charts, you can use hourly, you can use half an hour, but to simplify things and make sure that we stay on just one time frame when we enter and everybody understands what we're doing, we select the 1-hour chart. On the 1-hour chart, we will look for MIBS, right? That's called for Master Inside Bar System, right? And Hunters, which is a reversal pattern. Double top and double bottom with little specific rules. This, as they are very accurate to predict reversals in the market. So finally, we have found the reversal wave. That was the first one. Remember, just because you see this one doesn't mean it doesn't have a first wave. Because if the first wave is a larger wave than the first smaller wave, then it's still the first wave. Okay? All right, so now when we have this, we can actually hide with this eye symbol here, ADR reversal. We don't want to remove it, we just want to hide it so we can see it if we want it again, right? But we want to have clean chart when we do this. Now what I'm going to do, I'm going to mark up. This area was 50% reversal, and this area was 50% reversal. This is my new downtrend. We have little small wave into a larger wave, right? So now what we do, we go to the 1-hour chart. You see up here, 1-hour chart, same symbol, everything, same feed, right? And here you will see my different areas of the MIBS, right? MIBS or MIBS, this one. It should be inputs, it's set to 0 here, not what it is default, right? Yeah, like this, reset settings. It looks like this, not fun. So this should be 0, and this should be kept at 6. And that's all I do, right? Change the cent parameter to 0, right? So this is our, you see here, this one here. So yeah, I'm moving it here. It's same on the. This is a smaller time frame, right? That's not the small one. That's the small one. You need to click on that chart. Okay, so this is an area. See, it's much harder to see on the 1 hour what's going on, right? But we know what's going on the daily. That's was our number one rule, right? So when we come up here, this is the 50% retrace, right? On the daily. This is probably a wick on the daily. That's why I put the box there, right? So when you come up here, as you can see, the last MIBS was here. And let me explain the MIBS, because it's not that hard. But when it says reached, it means that you have a master candle, a long candle, that within it's open to close in this case, because it's a bullish candle. Otherwise, it's open to close, a bearish candle. Within its open to close, there are at least 5 candles that cannot break out of this open close of this long one master candle. It's called consolidation, right? It consolidates here. Can't get out of jail. So when that is reached, it means that market has halted this price. It has problem to break on the upside, problem to break on the downside. But when it break above this master candle, you see what happens. It will give you the information broken. So you know the price has broken out of this one, right? So if this was happening up here, for example, on this, say this is the master candle, this would be your 5 inside bars, right? And then you want it to break on the downside, otherwise we wouldn't be interested of it, and we would have to manually check when it breaks on the downside, because we are not going to continue Asian trade this one, because this is 50% of the daily, right? So when we're here, there's not much we can do, right? Wait and wait and wait, right? Day 1, day 2, day 3, day 4. What happens at day 4? You see it? Regular double top. This level here. Get a regular double top, right? Many people know them as M patterns or double tops. This one is wicked and then comes an engulf. Most solid way to find a reversal. Not alone, candlesticks alone is not worth much, but when you combine it with the first wave on the daily or an ADR continuation wave on the daily, it's very powerful. So we either want the MIBS to be there, or the double top to be there, or double bottom, or both, right? Let us continue to see this larger wave that we have now. This is the smaller wave, right? This is up here, see that? Where we are painting now. This is the retrace of it. This is my double top. But then we have the larger A, B, C to here, right? So click on that one. And here you see that block, right? See how it's reached here? This one, this is the master candle here. 5 candles that's reached. Good. You can set alert on this one, but you need to set alert on each pair because it won't use alert. You need to right click, have alert on MIBS, and you want to have this one. You want to have when it gives you the green candle, which is a green arrow, which is this one, and the red broken when it's this one. Okay. All right. So this one we ignore because we want it to break below here. So we wait, but we must be up in this zone here around 50%. See that this one, this peak here doesn't have anything. Doesn't have a hunter, not a double top, nothing, right? Market moves down a little bit, and then it happens what we want to happen, right? Let us go to this chart. So take away that one. We get the MIBS here at midnight. It doesn't really matter why that happens, but we get the MIBS, right? This is the long red one here that eats 1, 2, 3, 4, 5, total 6, like we have in our MIBS here. We want 6, right? But what happens before, you see that this has broken here. So this would be our entry if it only was a MIBS. But we have something else here. This one. Again, a regular double top. You see how we have 3 wicks here, totally fine. See how this one, this body covers the previous one here. I don't know if it's bullish or bearish, it's indecision. It's open and close at the same price. This together with the MIBS is everything you need because you have full match on this one. What you should do here to be safe is to make sure that you can have a trade, take short position. If we were entering this candle here, right, we want to make sure that we stay above the highest price of this one, a little bit higher like this, right? And you want to make sure that you make 2 or 3 times your risk. However, the easiest way to find out is to see, okay, we remove everything here. If this was my trade, right? If I entered up here, which we did, Remember, we entered here. See that? See on the daily where we are? And the next support, to the left, to the right, is here. 1760. Right? It's there. So we go. See where it went? To the lowest wick of that one, where it stopped. 1689. But 1716 was our body, which we take normally because it's safe. 1760. And by knowing all this, how you define your targets, and you never have to use your emotions, because that's what kills most accounts and people in this industry. Not people, but their accounts. So if you are entering here and put a stop right there, you say, okay, 1716 there, plus spread, so we need to take a point like this. 3.71 times our risk. These are trades that you can take and trades that you can profit from, and trades that will make your account grow. But this is hard work. Identify charts, learn ABCD waves, or at least understand the 50%. Go check for MIBS, go check for hunters, right? But we have made all these tools available so you can have an easier way, right? We will add tools as we go if needed. But right now we have the entry tools is the MIBS and the hunter. We have the super nice ADR tool here to use for continuation trades. Know where the ADR is. 3 down, 1 up. Okay, that's normally when it goes at least 3 down, then you know it's a good place where the market normally reverse. Then 1 up and then reverse, right? It's not always that, of course, but it can be very helpful instead of sit and measure this manually, because that most people won't do that after a while because it takes too much time. I'd rather use Fibonacci tool and so on, but ADR is very, very powerful. So that tool, together with MIBS, hunters, knowledge of the first wave of the daily, knowledge where support resistance is on the daily, right? And what you should be doing when you're trading, even if we have 1716 down here, right? If you were entering here, when market breaks below here, you already have your stop up here, so you don't need to do anything. But when it breaks down here, comes back up, and then breaks this support, this new support here. As soon as this candle closes, you go up and put your stop above in this area, highest wick normally, right? Push down, comes up, push down, and you will probably be out here. If not, if you put your stop here after it, as it pushed down here, put your stop here or there, you will be stopped out at 1755. But you see, you still have 2.28 or less, 2.10, but you still make 2 times your risk. And you aimed for more, but your stop replace stopped you out. No one should ever sit with this kind of trades and expect it to go here every time. That's not how markets work, sadly. But this is our target. So when we stop replace down to our target. That's our plan. Don't go even further, even doesn't matter how good it looks like, and don't go shorter. If you get stopped out, you can't do anything about it, but don't change to say, okay, I'm in a little green here, I'm going to close this one at 1.18, because then if you take 2-3 losses, your brain and head is going to start spin, and you're going to start think very negatively here. Please don't do that. This is our worst enemy. It's leisure trading. When you come up with your own ideas on why you must leave, there are news, something happening in the world, and so on. We don't care. Market don't care normally, right? We just follow our system. News just give volume. We don't care about the direction. We follow the system. That's number one. So this is our daily system where we use the first wave normally, use 1 hour chart with MIBS hunters. We can continuation trade wave 2, wave 3 with the ADR tool, right? That's our daily system. And since there may be many videos, many information sheets and so on, understand that the tools that we add here, the ADR, the MIBS, the hunters, they are there for you to apply to your trades so you can do the best possible trades. In all simplicity, what we do is looking for peaks that are taken out, go back up to 50%, find MIBS hunters, trade it to first support resistance. That's what I explain now in this video in 35 minutes, but in detail so you understand why and what we are doing. This way you can become a very professional trader. But there are more systems coming. But this is the first one, and I hope you enjoy it, practice it, because this is probably the hardest one of them, but also the one that you can stay in for a very, very long time. This is swing trading, this is long-term trading, because waves on daily doesn't happen every day, of course, but when they happen, when you take the first wave, normally you can stay in for a very long time. Or exit part of your position and enter again and so on, using the nice ADR tool that you can apply. And everything is free, everything is available. Just go practice, go work. Don't expect anyone else to do it for you. Thank you for listening. Bye for now.